Good morning, everyone. Welcome back to Marketing Matters. I'm Sarah Touchstone, Landmark Titles social media marketing strategist and educator. I get the pleasure of bringing you all Marketing Matters live every Wednesday morning at 10 a.m. Arizona time. This month, it's about getting prepared, right? Preparing yourself. November is an amazing time to really look at how your year went in real estate and how you can plan and you can move forward. Luckily, the market, it's kind of at that point where you can plan. Chris and I were just talking about how sometimes in the real estate market, you are throwing spaghetti at the wall and it is sticking or it is not. But this market, guys, this is a good one to implement, to plan, to move forward. And we're going to talk about how you can use those market trends and market stats to plan for yourself and to help your clients plan for their future as well. I'm joined today by Chris Altman. He is an amazing stats guy. He does this every month for his brokerage. So he's in there. He knows these stats inside and out and the trends that are going on in the market right now. So I'm excited to have him on. You guys know that I'm not a numbers person. That's why I bring experts on for numbers, but I love following along with these numbers. I'm glad that there are people that can explain to me what these numbers and these trends mean. But man, guys, I am all over it. So I'm excited to have him on today. Chris, thank you for being on. Tell us what's going on with these.
I am super excited to be here too, Sarah. Thanks for having me. And I mean, as far as numbers are concerned, I enjoy the numbers, but I really enjoy the interpretation of the numbers, right? There is, I think we've all attended stats classes where they just show up a bunch of slides and they have numbers and then that's what you got, right? You have a bunch of numbers and like you just attended a math class, but didn't go into the concept behind it. Well, what do they mean? What are they doing? And how do they affect our everyday, how we react? How we can take advantage of or utilize the opportunities in the stats to, I don't know, again, display that we're the expert. You know, when it comes down to it, we're going to have to sit down in front of clients or in front of other agents or clients, buyers, sellers. They're all going to ask, how's the real estate market, right? How's like that's the question. You can't avoid that. If the second you're a realtor, it doesn't matter who's in the room. Somebody asks, how's the market, right? And so being able to take those numbers and interpret them into a conversation is that's that transition that I really enjoy. And that's definitely where I point my stats class. So yeah, if you don't mind, I'm going to share my screen. I only have a few slides. I guess with that little intro, I can tell you I'm not going to be super data numbers deep here. I've got some graphs, I've got some things, but we're going to talk about what they mean and why a bit more. So let me share that one. All right. You got my slide, right? Excellent.
It hasn't shown up on mine yet.
Okay.
It said that it was. I don't know if there's
I should be showing screen too.
Other attendees, can you guys give a thumbs up or comment in the chat if you guys can see it?
Yeah, let's just make sure. Mine says that it is. It's
okay,
very pointed.
Let me stop sharing mine. Okay, I stopped sharing.
There we go. We had both of them sharing. That was I saw that. I like to start out with this. One, we talk about opportunities. So it's not about having the right opportunities, it's about handling the opportunities right. So we kind of always have opportunities thrown our way, and we get to decide whether we want to take them or leave them. And this is really what do we have on our plate and how do we handle it? So Mark Hunter, I don't know any other quotes by him, but this was a good one. And it's really about taking what the data that we have and seeing what we got. So from here, I'm going to dive into some numbers and then we're going to talk about it. So these lists, just to give you a backup, so these are all from Armless, right? I know a lot of stats use Cromford Report and those kinds of stuff, and I pull my data from Armless. We also pull some from Cromford, but what's valid today, I could get off of Armless. And again, not to be in the nitty-gritty details of the numbers, but the top one is the monthly active supply. I think if you're a realtor and you're listening to this, you've probably seen supply increase. That's towards the end of that top graph. And for the last few years, we've been used to this very, very low supply down below 5,000. I think we dipped into the 2,000 range for a week or two, and then back up. And we did this, we kind of flooded back on, and then back down, and we're climbing back up. And a lot of people can see this as volatile. And I'd like to point out that we're actually quite a bit like April of 2017 and prior. So like we've seen this before, right? So this is not outstanding. This isn't not weird. This is really more healthily where we should be in the 20,000, 20 to 25,000 active listings range on Armless. So we like that. Then down below, and this is if you're economics or anything, you can see in the parentheses that top chart is supply, the bottom one's demand. So we're varying supply and demand here. Down below, you see demand. It goes all over the place. You can see some wackadoodle noodle stuff in the middle there in the 2020, 2021. So if we forget about that kind of stuff, we can see a couple of things in this demand graph that helps us understand what's going on. So one, we've got this little bit of uptick, and this is where we are very at the end there, October. But if I go back, and I just zoomed into it so it's a little bit easier to see. Like this April to April data here, we got a little bit down and then a shot up. And there's another one, a little bit down and a shot up. Skip over the craziness. A little bit down and then a shot up, a little bit down and a shot up. And here we are. I don't want to dismiss our little trend at the end, but what's important about all of these, they all have a bottom trough, right? That valley that's there. Each one of these is in January, right? So we can see that predictably the way we cyclically go about this is that we have from April through January a slight downward trend in sold listings. This is, and I could go back 2016, 2015, 2014, back into almost 2011 and see the same exact trend, right? And what happened prior to 2011, we were still getting out of the short sale market. So there was another thing that was all wacky and screwed stuff up. So what I like to point out is that in 2024, we're seeing a market that is behaving just like markets, our cyclically appropriate markets that are here. So with that, we can see what's going on here through October. And like I said, I don't want to discount this little upward trend that we saw in October. And we've seen some upward trends in these other years. You can see that we're also a little bit more compressed in 2024. I would say with the interest rates higher, buyer demand has diminished just a little bit. And so we haven't seen so much just extreme volatility, right? It hasn't gone up and down as much, but the trend is the same. We're just squished a little bit between there. We're not doing as high a highs or as low a lows, but we're following the same trend. So with that said right there, I mean, predictions out towards the end of the year, we can follow this. We're going to see sold listings drop a little bit. We are still selling around 6,000 homes a month, right? But we're going to see them drop a little bit. And then in January, they start picking up. With that, we're going to still continue to see inventory rise. We're going to see we may hit 25,000, we may hit 26,000 by the end of the year. And then in January, we're going to see that start to bleed off, right? January is when people pick up, right? We're going to start seeing things move forward and selling off some of that inventory. Less people start loading it on. Some realtors have called this time period that we're in right now, the load of luxury, meaning the higher end homes are loading on there. I didn't load up the graph for this, but you start seeing the average and median price of listed homes separate because we start seeing fewer but higher end homes load on there. So the average price is going up. However, the median price isn't changing that much because the bulk of our actual sales are the median level of inventory. So we see those listings come on. We can see volume increase because we do end up selling more luxury listings. So we sell more dollar figures, right? That we move them along. And that really kicks off in January. So what does this, like I said, without going into like raw data, I didn't want to bore people with a whole lot of specific numbers, but we're at about actually what I pulled yesterday, where we were at 6,666 sales, and that's what it was for the previous 30 days. That's still a lot of homes sold. So if you're a seller selling, there are buyers still buying. If you're a buyer buying, you still have some competition out there. It's not a fully swung into a buyer's market where it's out there. Now, it's also not a full-on seller's market. So the seller can't demand everything they want. The buyer can't come and demand it. It's really pretty close to balanced. So some analysis out of this, and I know we're pretty short into this, but what do we expect here? So the cycle is predictable, right? Whether you're talking about the election or interest rates, and we can dive in a little bit about interest rates here, incoming supply, even new construction is having a pretty good effect right now. They're close to 14% of the market right now. They typically, historically, have been between 8 and 10%. And why is that? I think really because one, the demand is there, buyers are still buying. Two, builders have caught up a little bit in their construction schedule so they can actually build homes. There was a while when they didn't have enough workers to build enough homes. And three, which I think is the most applicable now, the builders, since they also have control of the finance arm, they also can manipulate the interest rates, right? So you can see builders leading with come buy from us at 5.5 or 6% or something like that. They're offering these things. Now, you can tell your buyers, you're paying for that, right? They're building in that buy down, right? You are absolutely paying for that, but that's a hook, right? If a buyer is looking at both existing home sales and new builds, and the new builds have a 5.5 interest rate, and the existing home sales have a 7% interest rate, like they're gonna lean towards a 5.5, even once they figure out that that's actually costing them $25,000 more because they're baking that buy down in. It looks nicer to them because it's a lower monthly payment, or they can afford a larger home, right? Their money goes a little bit further. So even with these all this other factors right there, the Phoenix metro market should follow their cyclically predictable trend, right? We will see a slightly diminishing demand through the end of December. Sales will remain relatively flat. Pricing should remain relatively flat through the end of December. Then in January, we'll pick up, right? And we'll increase steadily through March. I know I just read all those bullet points on there, and it's a big no-no and to do, but that's important, right? So how does this affect what we're doing today and tomorrow, right? So what does this do to affect our conversations? So for sellers, one, manage your expectations. Let them know days on market are okay. We pulled up like a Facebook posting where people from all over the country were advertising their days on market, right? And like Cincinnati, Ohio was like average days on market 8, right? They're hot. But Atlanta was like 56, and Dallas was still like 37, and some others were 82, and some were 106. And so it was all over the board. And a healthy days on market in the Phoenix area, if you go just statistically significant data back years and years and years, in the Phoenix market for our average home price is between 60 and 70 days, right? 60 and 70 days on market. So the ye old days in 2020 and 2021 of putting a listing on the market and having an offer in 10 days, those are on average gone, right? We need to manage our sellers' expectations that, hey, a little bit longer days on market is good. We also need to manage our sellers' expectations that buyers are choosy, right? It's pushed a little bit. I don't want to say we're in a buyer's market, but it's definitely pushed a little bit and given the buyers a little bit more power. So if your listing is not the prettiest, nicest listing on the block, then it better make up for it in price, right? Buyers are looking at 6, 8, 10 different homes that all check all the boxes, and they're gonna make that determination based on two things: the price and what they got to do to it and how they feel inside of it, right? And I used to have an old mentor of mine would say, you can take a bushel of apples, all the same exact apples, take one of them, shine it up real good, snap it in there. The first one's going to be picked as the shiny apple. All the same apples, all will taste the same. The shiny one's going to get picked first, right? So position those listings as if they should be the best one on the block, right? Also, be very specific about your stats. That last point on here, and I'd love to go into more detail on how you pull these neighborhood stats. And we do that on our normal stats class. But the stats, and if anybody's worked in this area enough, you know that like some neighborhoods are just hot and some neighborhoods are just not, and some cycle at higher rates and lower rates depending on the time of year, and know that area. And I say that the realtors probably we all know, like, yes, real estate is very local, and yet where do our buyers and sellers get their information? Right, they probably get it off the news, which is taking some generalistic view from nationwide stats, which mean absolutely nothing to their actual local space. So, one of the best questions to ask when they're saying, "Hey, I hear the market's phenomenal." Like, you ask them, "Wow, where did you hear that?" Right? That opens up the door of like, what's their basis of their understanding on that? "Oh, I saw it on the news." That's great. As far as the nationwide market, it is. Your house happens to be a very specific neighborhood. I'd love to sit down and talk to you the stats about that. Just like, hey, we need to get local on that. Be okay with getting hyper local around your neighborhoods, with your sellers, so that they know exactly what's going on. And their friend that sold their house in 2 days, 5 years ago, that's cool, and doesn't really help out. Or their friend that had their house on the market for 90 days and didn't get anything, but it was in this outlying area with nothing next to it or something like that. That again, not the same stat to do that. So moving over to buyers, this is a little bit more exciting part. Wrote there, now is the time to act. Why? I'd say ignore interest rates. If your buyers can buy, they need to buy now. Why? Because not only will volume start increasing after January, some sellers will be able to take advantage of that, and so will prices, right? And if your buyers are thinking, "Man, no, I want to wait till a little bit lower interest rate," I have another graph that is just enormously confusing to look at, but interest rate and price are inversely proportional to each other. As interest rate goes down, price goes up. So if they say, "I'm going to wait for the interest rates to go down," say, "That's fantastic as long as you're okay with paying more for that house." Whoa, wait a minute, because that's exactly what's going to happen. As those rates go down, those housing prices go up. So what's the best way to do it? Everybody should have a fantastic lender that they speak with. Talk with that lender and ask them, "Hey, do you do free refis?" 90% of them will. Their time period, 6 months, a year, 2 years, 5 years, those might vary. But put that out there to your buyers, like, buy it now. In 6 months or a year, if the interest rates are lower, go refi it and change your payment. If the interest rates don't go lower, then you were really smart to get in now. If the interest rates do go lower, then you would have bought the house at the best possible price and then been able to adjust your interest rate the best possible rate later on, and you have the best of both worlds. So you're a genius no matter what. But waiting will cost you money, time, happiness. Basically, if you need to get into a house, now is an excellent time. We always hate to say we want to time the market, right? The buyers want to time that market perfectly and get it. And we're in that window right now. We have a boatload of inventory on market, 20,000 homes. So your choice is as broad as it's going to get, right? We have interest rates that are historically not horrible, right? So not bad. They may not look good compared to the 3% that were in the recent netherworld that we slipped into for a year or two. But 7%, 6.5%, that's still not bad. And prices have, I don't want to say they've gone down, because in some areas they have, some areas they haven't, but they're stagnant. They're stable right now. And so you're going to get this. And what's going to happen in the future is, the feds are teasing that they're going to lower the rate. How fast they do that is still up in the air. Whether they do it on the 8th this month, whether they do it in January, whether they do it again, how much they do it over time. All of the predictors out there say that rates are going to come down by the end of 2025. as your buyers hear that and they're like, oh, well, then let's wait till the end of 2025. All of the pricing will have that baked in by then. They will pay more for that house. So as the rates come down, prices go up. So right now is a great time to get in and buy that house and move on it. And then if rates do come down, do the refi. You know, talk to your lenders. There are great lenders out there that'll handle these things. And there are great title companies that, you know, will handle, hey, if you do a refi and you do it through us, then we have these discounts. We'll make sure all of that cost stays low so that you, again, get the best possible option that you got. So there's my analysis. Really, sellers and buyers, we handle that. This doesn't sound like it's that phenomenal of news for sellers, but it is the fact that we still have 6 to 7 homes being sold every month, right? So of the let's use easier numbers to math out. Of the 20, I'm gonna predict by the end of this year we'll have 24,000 on the market, right? If we're still selling 6,000 every month, you have a 1 in 4 chance of selling it that month. While to some that doesn't sound that awesome, a 25% chance, but you make your house the nicest one on the market, you'll sell, right? You play the pricing game appropriately, you'll sell. Those things will happen, right? The buyers are there, people are buying. It's not just a stagnant market where nobody's doing anything. We have this volume, we have this motion, so let's take advantage of it and manage those expectations. And in a world where you can be anything, be kind. So let's chat with our people. Let's talk it up, and yeah, be that source of professionality and that source of information for them, so that when your sellers do come to you, you know what, if they do say, I don't think I do want to sell now, you say, excellent, then we'll be able to sell it for a little bit more next year. Maybe you're just going to have to, you know, survive that debt service and be in it for a little while. And I'm your person. I'm your realtor. Call me. That's pipeline. That's business. That's future business, and that's how you stay in business. Keep those relationships going and be that expert. So there you go. I know we probably have questions and stuff like that. And like I said, I didn't go too data crazy because I get sleepy. I do that. And
I think that was great though, Chris. Like it is kind of refreshing to see us going into a market and market trends that are normal.
Yeah.
Imagine that.
It is. It is. I can stop my share here so that we can chat. It is. It's nice to see something that's predictable and usable, right? When things are unpredictable, I have a slide that says, predictability equals happiness, but predictability also is boring. We're in this time. We're in November. Actually, if people are running their business right, they've probably already done their business plan for 2025, right? They've laid out stuff. They know what they're going at. They know their goals. Now you also know what kind of conversations you need to have with your buyers and sellers, right? If you're lining up those actions for the next 3-6 months, those buyers that are on the fence, those sellers that are thinking about the change, you know what conversations to have, and you know what you're probably going to encounter over the next 3 to 6 months.
Yeah. Chris, we do have a question in the chat. Do you think things will pick up now that the election is done?
Probably. It is. We've done this stat before. I went back over the last, 5 elections, so back 20 years, and there's very little actual market turmoil that happens. So in the end stats, it doesn't show up, and I think that's because the downfall and recovery time period is too short for our stats to figure out. Like people may have stopped buying something last week. Right. And then after today, they'll go for it. Right.
Right.
And when it comes down to it, when you get to the outlier of people that really are going to allow the unfamiliar, just unpredictability of what the election is going to do affect their life choices. Right. That's going to be a very small statistic. That's not going to shift a whole lot of numbers. Yeah. If people need to buy a house, they need to buy a house. Their family's still growing. They're still They still need to, their job's still moving. Like all of those things are still happening, whether or not there is an election. But I do know realtors will feel it on a shorter term basis. If they reached out to people that were trying to do something 2 weeks ago, they might have been sitting still, and then they'll pick up and do something this next weekend.
Yeah. Well, and I think the election time of year here in Arizona kind of follows along with a little bit slower time for us anyway.
Right, right.
So this is kind of like that period that's a little bit of a lull anyway. So
Right.
we won't maybe see any response to this until like January, February.
Right. There's a little correlative effect there that people can look like, oh no, it's slow in November because of the election. Well, the other 3 years we don't have that, so it does the same thing. So it's not really causative. So that's yeah, something to know of. If you're on a more personal level, like when you are talking with your clients, it's good to recognize what state are they in, right? Are they in an anxious, nervous state where they got to let things go? Well, then let that play out and don't try to get them to do something they don't need to do. Whether they're gung ho to do something, play into it. But on a market wide level, we're seeing the same trends that we saw every good predictable year.
Wow.
Yeah.
Imagine that, guys.
I know it.
Back to regular market trends.
Regular scheduled programming. Right?
Yeah, but this is great. This is actually great news for us because in real estate, everything that we're doing, we will see the effects, 3 to 6 months after, sometimes even years after.
Right.
So if you can sit down and you can work your plan and plan your work, this is a really good position for us to be in real estate. Absolutely.
And this is about the opportunities that present themselves. And this opportunity is that you can truly be an expert, right? Mm-hmm. You can be the go-to because this is something that I have pretty good confidence about what we talked about here. Like, hey, sales are going to stay pretty normal through the end of the year. We're going to load on some inventory and then they're going to start moving in January. And that right there, just those few sentences said to most people that are most buyers and sellers, they don't fully know, right? Yeah. And right there, just those few sentences are going to put you in that status of like, hey, this realtor knows what's going on, and this is who I want to trust.
Well, that's gonna be fun. 2025 should be great then.
2025 should be great. We should see a little bit lower interest rates. If anything, we should see buyers used to the interest rates, right? Things moving along. We are going to get past this election, so any other things that are hesitant around there in other economics will settle, and we'll start seeing movement again. And if 2016, 2017, 2018 have any other predictions about it, is that 2025 will be a great year. Great year to be in real estate. Yeah.
Good. Oh, that is amazing. Amazing to hear, Chris. Well, if you guys have any other questions, please utilize the chat window, put them in there. I'm going to wrap up our webinar today with a couple of other classes that we have going on. Knowledge really is power in this industry. So I hope you guys are leveraging the stats that you learned on here today, as well as some of the other things that we have offered to you guys. So the next couple of months, you've already got your business plan. We talked about that last month. You know that you've got to reach out to your clients about what's going on. And then, yes, things are going to hit really good in 2025 from what it sounds like. In the meantime, get in and take some classes with us. If you ever are not able to attend Marketing Matters live and find out what we have going on, please go over to our event page on our website, ltaag.com/events. We keep everything that we have going on updated on there. So I'll quickly go through what we have coming up this month on Marketing Matters. It is about getting you through the holidays and beyond, because as we found out today, beyond is going to be a really good place to be. So the holidays, you got to stay top of mind though, because if January hits and you haven't stayed top of mind with your clients, somebody else is going to be out there staying top of mind with them and trying to make sure that it's their clients and not yours. So we've got a couple of things coming up. we've got the Holiday Helper Program. This one is really neat because 2024 was a tough year for a lot of people, but a lot of people have equity in their homes. So figuring out how to help them with their equity through the holidays is going to be great. That's next week. And then the following week on November 20th, we've got Winterizing Your Real Estate Finances. This one, once again, 2024 was a up and down and all around type of year. So getting your finances in order as we wrap up this year and getting yourself prepared for a great 2025, it's going to be amazing. So 2 other webinars that we have coming up this month for Marketing Matters. The week of Thanksgiving, we do not have a webinar, so mark that on your calendar, but don't worry. There are tons of recordings of Marketing Matters. So if you're really missing Marketing Matters that week, just reach out to your business development manager. They can send you a recording. We have, I think we're about 180 of these Marketing Matters recordings because we've been doing it for 5 years. You can ask for a copy of this recording too if you want to go over the numbers again. So just reach out. It's going to be a good month for Marketing Matters. Then tomorrow we've got an in-person class on short sales. Yes, short sales. We're using those words again. This is tomorrow from 12:30 to 1:30 at the North Phoenix, West USA office. This is in person. If you want to attend, just reach out to Renee. Let her know that you will be there tomorrow. And then we've got CE coming up. Get your CE, and this is another great time of year to get some of those classes. If you're a little bit slower with business, do the things that are going to help push you forward as a good realtor in your marketplace. And we all need CE. So rules of the code, commissioner standards, and NAR code of ethics. This is going to be November 19th from 9 a.m. until noon. This is at the Atrium at Arrowhead. So make sure that you RSVP for this. Reach out to Renee. You can see the little arrow pointing right to her on the flyer. So that's the lady. Reach out, get registered for that. That Atrium at Arrowhead room does tend to fill up. And then we've got the commissioner. Yes, she is doing a class on building value propositions. This is November 21st from 1 until 2 p.m. And this is at the Department of Real Estate at their North 15th Avenue, Phoenix location. So if you want to get a little bit more information from the lady who knows it all, please attend RSVP with Renee for this one as well. Renee is a busy lady. She's got a lot going on. And then coming up in December, we are really excited about this. We did postpone. We had this scheduled for yesterday, but it was election day and there was a lot going on. So we wanted to make sure that everybody could take advantage of that little bit of extra time. And we moved this to December 11th. This is our From Service to Sold panel. We are bringing in 5 amazing veterans that work in the real estate industry, whether it's through actual real estate, lending. We've got the full gamut of amazing people to come and tell you about what values they have taken from the military into the real estate industry and how they've built relationships by utilizing some of those great values. So once again, space is limited. Scan that QR code, RSVP for that today. That is December 11th from 1 to 3 p.m. down off the Camelback Lakes training room near our office there. And then, of course, we've got our home tours. Moon Valley is the 3rd Thursdays at 8:30. And Biltmore Luxury was actually, no, it wasn't today. That's Arcadia. It's the 4th Wednesday, just like it says on there. So we do these every month, even through the holidays. So please attend. They are great networking, content, and just seeing, unique homes on what's out there. And then, of course, thank you guys to our business development management team. Any of the things that you see on Marketing Matters that you want to implement into your business, please reach out to our business development managers. They can help you with just about everything that we talk about on here. They are an amazing, amazing group of people. And if they are not already your business partners, your industry partners, trust me, you want these guys on your side. Beth, Dina, Emily, Keith, Mary, Michael, Michelle, Patty, Renee, and Raylan up there in the Prescott area. If you don't already have their contacts, please reach out and I'm happy to make an introduction. And of course, thank you to Landmark Title for allowing us to bring you Marketing Matters every Wednesday morning. We have 7 offices across the valley, 2 up in Nevada, 1 up in Prescott, to service all of your real estate title and escrow needs. And of course, thank you to Chris for coming on, giving us stats. Chris, there's a lot of hope out there for us.
There is. Thank you very much for giving this opportunity. I hope everybody took that and has a fantastic end of year.
Thank you, Chris. I think it will be. Guys, finish strong, get a plan together, and we're all going to hit 2025 together in the new year. And it's going to be a good one. There's a lot of good stuff right there on the horizon.
Definitely.
Thank you, everyone. Have a good day, and we'll see you next week.
Thank you. Thank you.